Good morning, everyone, and welcome to Quantum Leap homework session for Monday, May the 5th, 2014. It is a brand new week. I've been on vacation for the last week, so this is going to be somewhat of a short session. I haven't had a really good time to really dig into the market, as I didn't have good internet last week, and then when I got home yesterday, I had all kinds of stuff I had to get done, so I didn't even start looking at the market until this morning. But we're going to do our regular morning routine and get started. For those that are visiting us or don't know who I am, my name is Doug McKay. I'm the founder and head moderator for Quantum Leap. Quantum Leap is a self-organized learning environment. We've got a Skype room that we've been running for over 4 years now, and each morning we come together and talk about the market and set up our levels and get ready for our trading day. Of course, I'm not trading. I have a very long list of rules of trading, and one of my rules with my trading is that once I've been away an extended time and away from the market, I don't allow myself to trade for the first 2 days until I get a good bead on the market. So I won't be actually trading today, but I thought we'd get together anyway, take a look at the levels, see what I see, and share those thoughts with you. If you're interested in finding out more about me or my room, or our room, I should say, you can send me an email to d.mckay@selftrader.com or give me a Skype contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. We do need to do the legals, so let me get that out of the way. This information is for the purpose of educating members who want to expand their knowledge in the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating in a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence, trade your own trade plan. All right, so let's start with our key numbers and go over those. I wanted to just take a quick look at the COT report. I was looking at that earlier. Again, we are as retail traders, the retail traders are net positive, where the commercial paper and the large stack are net negative. And again, we didn't, excuse me one second. We didn't quite get the breakout that we were looking for. They tried to break it to the upside last week. They couldn't get up to that 1892. I think we're going to be chopping around the 65 again. It's still the composite VPOC and the microcomposite VPOC, and we're still in this balance. But again, I don't think that the highs are over. I think we see a little bit of a sell-off, in around the 64, probably come down to that 60 level again and test that, and then likely rotate back up and through and test that 68.50 one more time. Let's take a look at the key numbers. I haven't really looked at these. Year open is still down at 1837.75, so we still have a positive year going on. Our high of the year is up at 1892.50, and our year low is way below us. Month open last month at 1879.50, had a high of 1886. Didn't quite get back up to that 92.50, and then the low was 1871, and of course we're trading below that. Looking at the intraday numbers, Friday opened up at 1878.75 in the Globex, had a Globex high of 86 and a low of 75.50 with the open of the RTH session at 77.50. So we opened auction in range. You can see we had, more balance. Normal variation, neutral, neutral, normal variation. So still just chopping around in this zone around 65. Our opening swing high 79.25, opening swing low 75 for a 4.25 point, which led us to believe and give us a clue in the market that we'd get a rotational day, and that's exactly what we got on Friday. Our initial balance high 85.75, initial balance low 75 for a 10.75 point. Quite a large rotational day. in terms of the initial balance. 1230 number was lower at 75.50. Our RTH high 85.75, RTH low 72, and we closed at 74.50 with the VPOC shifting down to 75.25. I'm not really putting a really big emphasis on this rotation and the shift of the VPOC lower. I think we're simply coming down into that 64 balance again. Our value area high 80.75 and our value area low 73.75 to keep an eye out. And we did do a break to the low side of the IB at 9:51. And again, the most standard time, or the current average time that we're breaking that IB has been shifted towards that second pocket at 9:52. I believe is the most. Let's just go take a look at this really quick so we can see where we are for the year so far. Oh, it shifted back down. The average for the year is down, still now at 9:33. Let's take a look at the month of April, though. See if that is corresponding. Thank you. Yeah. Something is wrong with my numbers. Why is that? Something's out of whack here. $8.59. So it has shifted. So it's getting, right now the average IB break is closer to the 8:59 Central, 9:59 Eastern Time. So we have had later shifts as of late, but the average for the year is still in around that make and break at 9:30. Taking a look at the daily report, I don't have my highs and low in yet for the Globex, so we'll just skip that and take a look at the news. We've got 8:45 final services PMI and ISM non-manufacturing at 9. So the big news is at 9 Central Time, 10 Eastern. Let's take a look at the trends in the macro to the micro. Monthly trend still intact. We are trading in near the open of the prior month and trying to hold above that 68.50, but we're coming back down to test that 65. But the trend itself on the month is still intact. Good slope and separation on the 9 EMA and 20 SMA, so the trend is still intact. We opened this week up at 1875.50, and we're currently trading 1865 around that major balance area. We still have slope, we still have separation. The trend on the weeklies is still intact, although we do have a possible head and shoulder setting up here on the weekly. So I'd be watching the 1825 area, but really it's that 1821.25, that CLV end, and we'll take a look at that on the composite in a minute. On the daily, you can see that there's another head and shoulder pattern here. You've got a break below the 9 EMA currently. Test of the 20 SMA will bring us down into that 1859, 1860 area by the time we get there. But we're basically just chopping around on the daily in this balance zone around 65. No clear direction on the daily. Taking a look at the geometric chart, there's 4 pitchforks on this chart. The longer term is still intact, which is this. We took the ultra long term off because we're going sideways now, but the intermediate frame upward sloping fork is the red one, and then we've got 3 opposing forks to the downside right now. We still have this energy point right here that's due to hit this week in around the 8th, and that's down at the 1841, 1842 area. Currently right now, We are in the upper channel of this new fork that I just added in. A test of the center line today would take us down into the 1852. Test of the longer term downward sloping fork takes us down to 1847 level, and that will test the upper line of the longer term downward sloping fork. So really, pitchforks, geometrics not telling us anything except that we've still got this energy point that's coming up, and we're likely to get a rotation to the downside down towards this. A retest of the upper line today would take us up to 1881, but I'm not thinking that that's in the cards today. So let's take a look at the trend intraday, seeing where we are coming into this market this morning. You can see that we had a crossover on the 4-hour. We came up, it's not naked, basically they came up and retested. That's a close enough test for me that I wouldn't consider it naked. We do have a technical gap going on in the 4-hour. Close of the gap will take us up to that 1871, and that's a key balance area, so we're likely to get a rotation possibly there today. Test of the upper 20 will break us into that 1875 level. But the trend itself is starting to look to the downside, although we have created this technical gap, so I'd look for that to be closed. On the 30-minute, much more apparent of the downward trend. We had this technical gap. This is a good example of a technical gap being closed through time as we go sideways, and it closed on this bar right here. Good slope and separation to the downside on the 30-minute. So the 30-minute is definitely trending down. On the 5-minute, we had a beautiful trend overnight coming down, creating this technical gap here, rotating up and closing it, and then just going sideways for the last couple hours. No clear trend on the 5-minute. So let's go take a look at the big picture. Excuse me. Bring this over here. All right, so the overall balance that we're in is still in around this 1865. Now the important thing too to note is not only is the 1865 the microcomposite, but it's also the composite VPOC that goes back to November the 9th, 2013. So the most accepted price, and in the last year and a half almost, is basically this 1865. That's one of the reasons why we're having trouble breaking out of this balance zone for the microcomposite, is we've accepted a major long-term price acceptance here at 1865. The key line above is still the same as we were talking about, the week before I left, is this 1868 and a quarter. It was 1868.50. Above that, look for rotation up to the 71, which will be the test of the range low from Friday, and the key microcomposite in the balance that goes back through April 22nd through till Friday, and that balance, that is the most current balance, is still around that 1872.50. And then the last 3 days we were trying to hold balance higher and tried to make a move to break out of this prior microcomposite value area high at that 1886.50. We got right there to 1886 and rejected it, and weren't able to make a move to to break out of that balance where we tried to hold value around that 1881.50. We talked about that the prior week before I went away. They came up here, seller stepped in around this 81.50 through to the 86, and then kept us from breaking out. And now we're back below the 68. Now the overall microcomposite value area for the longer term microcomposite is 1873.25. The value area low is down here at 1833.50. So we're back in this this balance. We haven't broken out. I'm still expecting a breakout in the near term. Don't know if it's higher or lower, but we are going to break out and have a major move. We just didn't get it last week. I was anticipating it. Everything's setting up for it to happen. So just we needed to come back down here to this 1865 again. So the levels that you want to be looking at is 1868.25. Really 1868.50, because the value area low from the last balance, the most current balance area, is right there as well. Below that, 65 becomes a major magnet with probably a rotation down to test this 1858 level. It's the value area high from the balance that we just broke out of, this balance right here. Oh, sorry. So we tried to hold up here at this 81.50. We couldn't hold. They came down towards this 34.50, 35 area, which we talked about it, and then they rotated it down all the way to where it all started down here at the 1807 level, which was our target when we had that breakout of this balance area, and then they found an accepted value down at 1824. Rotated back up, and then in the last few days they've been up here at 72. But now that we're below it, I'd be looking, if they can't hold the 65 and rotate back up through 68.25, then I'd be looking for a further rotation down to this 1858. And you can see on these 2 days, once they broke out and they came back up here, now you have 1853, which was where we came down and found buyers on what day was this last week? The 25th of last week. So right now, the way I'd be trading this is, be careful in around the 65, because it's likely to chop around. But if you see it breaking down, I'd look for rotation down to this 58 and 55. But if we get above 68.25, I think we'll get a strong rotation up to test that that 71 and 72.50 area, with possibly coming through to 75 and 78. So let's take a look at our overnight and start moving our numbers over. See how this looks setting up against yesterday. We're going to open up out of auction, or out of balance and out of value. So we have to look for initiative sellers stepping in here and accelerating this move down towards this 1860. Our overnight low is 1864.25. That's likely to get tested, if not tested, prior to the RTH open. The overnight low is likely to get taken out on the RTH open or thereabouts within the initial balance hour, the first hour. Our overnight high is 77.25. And our current VPOC is 1867. All right, and we get a value area here, 64. That really doesn't tell me anything that I need to know. We got a little bit of a double distribution with the LVN being in around the 71 to 70, 75. Remember that 70, 75 a couple of weeks ago was playing a key role. So right now it looks like we're going to go make a new low even before we open up. So I'll have to keep an eye on this. You've got a naked close still down here at 1860.25. and with a target of, there's that 58 too. So we're looking at that 58 as a likely rotation on the bigger picture and the microcomposite with 55.25. So that still is going to be your main target, below here. There's not a lot. There's this 59.50 and 61. Remember the 61.50 from 2 weeks ago? So what I'd be doing is I'd be using this 61.50 as a trade level below right here. Because if we get below that, then I think we rotate through, close the gap out, and come and test this main target below, which will be the 58. We'll just front run it by 1 tick at 58.25. You can see that on the Keltner, we've got a walk the line. Here's a beautiful lower Keltner line walk. We came down, closed below it, then got our Renko reversal. Then we came down and attacked it again. This is the signal to sell it short right here, and you would have sold it short somewhere, here, and you had a nice move down back towards a nice target, the line walk target down to that 65 microcomposite VPOC and 64. You can see that the composite VPOC for including the Globex is 67. So we're likely to get some chop between 65 and 67, but really it's the 68 that I'm watching, especially the fact that we've got the overnight VPOC there. So did we just put in a new low overnight? Sorry, I'm trying to get back into a groove here, and 63.75 is our new overnight low. And again, likely to test that. I'd be using the 68.50 to the upside. That's that value area low and the CLVN that we were looking at, right here. And then above that, you've got the range low from the from Friday's session at as your first target above 68.50. It's also an area where you could accelerate this trade to the upside, because if we get inside of the range on Friday, we're likely to come up and test the value area low. The naked close is here at 74.50, so I put 74 as the next target above. And again, it's also an area that what I'm going to do is I'm going to change this here. Make that a trade area and a target, and then the first target, which is also a trade area, is the 73.75. We're just going to front run it by 1 tick at 73.50. Come on. And then the big number above that is up here at the 75, this microcomposite VPOC. Okay, now you've got 72.50. In fact, that's what we're going to do is we're going to move this target down to 72.50 and then make this a trade area right here, because you could get responsive selling stepping in here at the value area. But then you've got 74.50, which I don't think is a big target as the close. The naked close, I think the big target is right here at 75, and this would be the main target inside of value and inside of range. Oh, come on. Okay, and then above that you've got the overnight high, which would be your extended target. I'm just going to front run that. And then really there's not much more above there. You've got 78, 75 as your value area high and the 8150. So I would put 71 or 78, what was it, 7850, 7850, which is right near the VWAP and midpoint from Friday with you know, the value area high and that 8150. So I'll front run the 8150 at 8075, which is the value area high, you know, as a continuation move to the upside. But really, you know, I think that we're opening up outside of value. I think the trade range today is really going to be from the 73 to 75 down to the other side of this, which is down here at this 58. Below 58, you've got 55 and a quarter. Remember how important that was as a CLVN. We traded off of that for days a couple weeks ago. 55 and a quarter. And then below that, okay, and this is something that I keep mentioning. We've got this triple distribution area down here. So you've got 45 and a quarter. So I've got a naked VPOC down at 47, but 45 and a quarter. Below that, I think we see the 39 and 37.75, which is our year open. So our year open is going to be our extended target to the downside. Because that's going to be the bears trying to get us back into a negative year. And then below that, you know, everything shifts to those three numbers that I kept on talking about in this triple distribution down here at 35 and a quarter. $29.50. And 25 and a quarter. And the big number below us is, you know, where I would finally say that we're going to get some major capitulation from the buyers and the bulls is at 21 and a quarter. Come on. And then I think we see below that, I think we're going to see that, you know, we've got 18, 50, remember that, but I think we really come down and test, you know, the 17.99 and a quarter, the 1800. Not really expecting that today. What I'm really expecting is a move down to this 58 area. And you know, seeing some strong buying stepping in around this area, possibly down to the 55. But if they can get above 68.50, then I would think that we get a rotation back up to test that 71, 72 area. And if we can get back inside a range, the extended move up to the major target inside of value and range, which is at that 75, which is the big number above us. But this 65 could cause us to get stuck in this area right here, and we can chop around. You've got some wicks. Let me just move this to the back. You've got some wicks and tails right here between the 68 and 65, so we could get stuck in the wicks, for a time today in between this area and just chopping as the buyers keep stepping in and holding us with a possible, push down to the 58.25, possibly 55. Below 55, I'd be looking for a rotation down to the down to that 50 or 49.50 area, as you have 49.50 and 47. It's going to put 49.50 as a target below. So that's what I'm looking at. I haven't been trading, so it's my first initial look at the market. You can see that we had a nice line walk down to the 65. The buyers have stepped in. Now you've got another Renko reversal. This bar could be a key to tell us that we're likely to come down and close below. If we close below the lower Keltner line here, then I'd be looking for that move down to the overnight low at 63 and possibly that 61 to 60 level on this move. A test of the Keltner center line takes us up to test the range low from Friday, and then above that, look where the upper Keltner line is, 75.25. So again, that lines up with our major balance below. Taking a quick look at gold. Last week, I was looking for that that pop in gold. We got it last week, but then we sold off again, and then we came back up again, and now we're holding above that 1300 level and going sideways. Looks like we're going to get an MA hug and a decision point in around, I think it's going to be in around the 1315 area, and if we can get above that 1350 area, then we could probably get a nice move up. Let's just take a quick look on the Keltner. I know we're running short on time, and I don't have my gold chart open, so I'm just going to skip doing any analysis on gold. So that's going to complete our homework session for this morning and the first day back. I'm back again. My rules don't allow me to trade for 2 days until I get a good sense of the harmonic rotations that we're currently in. But that's my initial observation for the day and how I'd be setting up my levels for the day. Above this 80.75, you're getting back outside of value, and you've got the 81.50 as your main target above that. But I think we're going to get some responsive sellers at the 80.75 level. But we might as well put it up. And then you've got 84.75 and 85.75, which I'd be looking for, sellers to step in there. Above that, you've got the 86, but I think it's really, we get back into that territory, and you got 92.50, staring us in the face, and likely the bigger picture. So that's going to complete our homework session. As always, trade well, trade safe, and we will catch you on the flip side.